Okay, good morning, everyone. This is JJ Arisha with Pismo Ventures, and I have with me today Xandra Laskowski. Xandra is the founder of OSEA Angels, or OSEA Angel Investors. She's also a member of Techos Angels. She's also a member of the Co-Fund and the Titan Fund from Cal State Fullerton as well. I don't know what else. She's Superwoman, so she can do it all. Thank you for being here, Xandra. I'll give you the floor in a second. Just wanted to recap a little bit on where we're at today. We closed applications as of Sunday. We have started already and will be in full force grading or scoring the applications for round one. Those will end by the 8th of October, and we will announce the startups that made it to round two on October 9th. So I just want to make sure that everyone is ready to do a 5-minute pitch, 5-minute Q&A starting on October 12th. It's very important. So I got many questions the other day about if you can use the slides when you're doing your 5-minute pitch. It's up to you. If it was 3 minutes or 2 minutes, I would say no, but 5 minutes is kind of long enough that if you want to use your pitch deck, you can, the slides you can. So a 5-minute pitch, 5-minute Q&A starting on the 12th of October. And the timeline and all the schedule of all the events is on the website, ventureplancompetition.com. After this event, this webinar that we have, there is a virtual networking time that we've been doing after every webinar. Stephen has put the Ohio social link into the chat. You can use it. Also, there is a password, so you need the link and the password. Just quickly, if sometimes we had some people having issues with that, use Chrome if you can, if you're using desktop. Otherwise, you can download the app from the Apple Store or the Google Play Store, and you can use the app, and it works really well. That's basically it. Good luck to everybody, and then hopefully we will see you all in the next, well, at all the webinars at least, and at the happy hour at the lounge later on. Thank you, Xandra, for being here. I really appreciate you being here. Just tell us quickly a little bit about yourself, and then the floor is yours.
Yes, well, thank you for having me, JJ. I think it's really important understanding what to put in your pitch deck, and we're going to go through that in a little bit. But I have been angel investing since 2013. I have over 30 companies in my portfolio, and I started OSEA Angel Investors in 2017, which is a women's angel investment group based at the UCI Cove, and we are investment partners with Techos Angels and Titan Angels and the Cove Fund, so it's very, very synergistic. And we've enjoyed that. We have 45 members, and we teach women how to invest and bring them deals that they would really understand. But like as you had mentioned, I'm a part of many groups. I like to diversify my investment dollars. And so I see a lot of pitch decks. I have 20 to 30 companies approaching me a week on average. And they come from networks and people I know and other angel groups. And I've seen a lot of pitch decks in my time, and it's a pretty concise formula. You want to keep it basic. So what I want to do is I put together a quick PowerPoint to kind of go over the main points that you should be thinking about and how to really assemble that pitch deck that's going to make an impact for us angels. So I wanted to go ahead and share this. I'm going to start my presentation. Let's see. Okay. So what do angel investors look for in your pitch deck? And your pitch deck really is your calling card. When a company reaches out, or an entrepreneur reaches out to me, the first thing I'm going to ask, they want to send me a business plan. They want to send me a business summary. I said, you know what? Obviously, they're not ready to talk to an angel. I need to see your pitch deck. And I can tell if this entrepreneur has really done their homework based on what I see in the pitch deck. And the other thing that's very important, especially here in Southern California, all of us talk. The angel groups, like I know JJ, he's Pismo Ventures, he's part of a few angel groups. I know many other angels, Pasadena Angels, TCA, all the different chapters. Titan, I know venture capital groups. We talk, And if we see something that comes across our desk and we're like, boy, this could be something, but the pitch deck's a mess, it's going to be tough for that entrepreneur to really get back in front of us. It's not impossible, but it'll be tough. So that's why it is so important that you have the strongest pitch deck that's giving the best messaging to hopefully get that next pre-screen or get that next meeting with, or phone call with the angel investor or group. So today we're going to go out what we look for in your pitch deck. So one of the things I look at, I call it the PMP, the problem you are solving. That has to be first and foremost coming across on that first slide or two. And the total addressable market, is, what is the market size for this solution? You could have a great idea, but maybe it's just a small business. It's not really something that can scale that would get an angel investor interested. So that's very, very important that I understand what the total addressable market is and the people solving the problem. I can't express that more. We are going to dive down. Bottom line, at the end of the day, we're investing in the people that are running this company, that are solving the problem. Because you could have a beautiful pitch deck and a total addressable market that's really, really robust. But if the people, aren't the right people to be taking this to market, you've lost us. Next slide. Pitch deck messaging. This is very important. You need to keep it clear and simple, easy to understand. We are third graders, you're a Martian. I mean, it's just that basic, because you might be the expert in that vertical, in that technology, in that solution, but we aren't. We're just looking for a great opportunity to possibly invest in based on those three things I talked about, the PMP. So if we don't understand what you're doing, what you're selling, what the problem you're solving in the first slide or two, we're out. We just don't have time. You have to have a compelling story. It has to depict conviction, which basically means you've uncovered a problem that's not being addressed, and there's a lot of people out there that want to have your solution to solve that problem. We need to see some solid numbers, user engagement, growth metrics. Are you in revenue, or what do you plan to do to get into revenue? We'll dive down a little deeper into those slides as we go. Tell a story that engages us. We really need to understand how you're helping society, how you're helping your clients. This is a huge pain point. And each slide should be on one topic, because again, you're going to be sitting in a room, or you'll be on a Zoom call like this, and we're taking in everything, but we just want to be able to see really quickly, concisely, one shot at that slide to really understand what you're trying to communicate with us. And avoid these mistakes. Using too many bullet points. We understand there's a lot going on here with this solution, and you want to get that across to us, but keep it basic. Just because, again, we'll dive, if we're interested, if you've got us with this pitch deck, we're going to have another phone call, and we'll have a lot more questions, and we can dive down into the specifics later. Don't make it more than 20 slides, because typically you have 10 to 15 minutes to pitch to a group or to an angel, and 10 to 20 slides, about 20 slides will do it. It'll get that basic messaging in front of us. It will make us understand that there's something here that we want to learn more about. That's good. We don't want to see any more than that. Be text rich and graphic poor. And what I mean by that is, again, big bullet points, large font. Using small fonts is not good for you. So we can really understand and get a grasp of what you're trying to convey. And don't overdo it on the color. Just keep it real simple, because then it's just like messy. It's like, oh wait, this is too much. There's too much going on here, and we may or may not want to learn more. So now I'm going to drill down into the slides, and these are kind of the order we like to see them in. You can switch them up a little bit, but this is typically what we see. You're going to have your title slide, and that's really your vision statement, the problem you're solving. This is the problem. That'll kind of give us that introduction to, oh, wow, this is interesting. Yes, they don't offer, this opportunity in this sector. Let's learn more. The problem. You're going to describe the problem, the challenge, the issue that you're solving. And you need to tell a short story to back that up on this slide. And maybe show some statistics on, who else is having this problem, what sectors, but just keep it simple. The solution. So here is your solution. This is your company. This is what we're doing to solve the problem. That's very important. If we see these first couple slides, you're taking us on a journey. we're learning more as we go into each slide. A demo, that's very important for us to graphically see, very topically, how your solution works. So you can either embed a small video, which helps a lot, but again, keep the video simple. But we want to understand with nice big bold graphics, how the solution works for the client. You can use a short film, you can use screenshots, we like those, like if it's an app-based, if it's something you use on your phone, that helps us kind of walk through how you download it and use it, a screen flow. But again, keep it simple in the slides. You can do a couple slides on this just to take us on the journey on how to use the tool. The benefits, of course, the benefits of the solution. If this is what we do, this is how we make your life simpler, this is the problem we solve, and this is how we do it. That's very important. Maybe have some customer feedback on, this tool has changed our lives. It's so great when we integrated it. You can use a few quotes. This is kind of the slide we want to see the quotes on. Your current status and traction, your major milestones that you've hit. Typically at OSEA Angel Investors, we see companies that already have a go-to-market strategy in place, are in recurring revenue. And so those milestones have been hit in the early days, they're past beta. This is what we're going to be doing moving forward with the capital that we're raising. We're just going to garner more traction. So we want to see what that looks like. What your revenue growth look like, endorsements from other customers or from strategic partners. What has happened since you've launched. That's important for us to see because it's showing that you're measuring your traction. This is where we started, and this is how we're measuring our growth, and they'll get us to maybe a more solid forecasted number for revenue. That's important to see. Market analysis. We really need this can all be done on one slide. You can have a few different graphics on it. Your total addressable market, your segmented addressable market, the market that you're going to be playing in, because you have a total addressable market, but really there's probably a segment in there that you're going to hit. That's your sweet point. We need to see how big that is, and what share of the market you're going after based on what solution is out there or not out there. That's very, very important for us to understand that you understand that, and that's where you're targeting your spend, your dollars. That's where you're looking for customers. Trends and opportunities. This is the why we're bringing this to market. It's based on the need out there in the market. We're solving a problem that's not really being solved based on our research. This is the area we want to kind of see, like, why this, why now? Business model. This is your revenue model. So we want to see how you're going to make money. And that needs to be very, very simple on this slide. It's a SaaS-based tool. It's affiliate, whatever that business model is. That's very important to us to just have a quick glance at what that looks like. We'll drill down into that later if and when you get to due diligence. Your go-to-market strategy. What is the strategy that you're going to use to penetrate the market and gain users? This is very important because it can be very expensive. So we really want to understand that the most cost-effective way, when sometimes it's word of mouth. We've invested in companies that hadn't even marketed yet, and they were doing $1 million a year, and that was because they had some strategic partnerships in the beginning, and it kind of organically grew. Every company's path is different to get into the market and to grow from there, but that's what we typically like to see. If you've done it smarter, and then now you're raising money to really penetrate. Focus on those markets that you want to get in front of, that's great too, but we want to see what your go-to market strategy is. And the competitive landscape, that is important. You can use like the little, I don't know if you've seen the matrix where, this is our solution, and then here's our competitor 1, 2, 3, 4, 5, and you can do little checks in there. That just gives us a glance of, these are the features you're offering compared to the competition that we see. That's important to have in there, just so we can see how you line up, and it'll be talking points as we move into due diligence. The team. The team typically comes, some companies like to put it in the beginning, some people like to put it at the end. We just need to see that team slide at some point. We really need to know, who you are, what makes you the person or the team to bring this solution to market. That's very important because you have to have some industry expertise. At OSEA Angels, we need to see a CEO or a team, someone on your team has built, scaled, or sold a company. That's very important because there's going to be things that you're going to come upon, and if you're new, that's okay. At least you have someone on your team or someone you're reaching out to strategically to say, let's brainstorm this. We've hit a pothole. We have to pivot. You're not going to know everything. I mean, I've been in business for a long time. I'm still learning. And we understand that. We just want to make sure the team is solid. They're communicating properly. That's very, very important. And you're surrounded with advisors and board members that are really strategic and are going to be helping you out. That's important for us to understand. We need to see your roadmap, your financial roadmap, and your product roadmap. Major milestones, your product, your marketing, your revenues, where are you going, what's happening in the next year, 18 months, 2 years down the line. And then a summarized financials. We don't need to dive deep into it right now. We just want to get maybe some projections. A P&L, you can put it in there if you want. We're really not going to look at it detailed right now. That would come with due diligence, but we just definitely need to see your current financials, your projections, something very simple on one slide. Then use of funds, your funding requirement. This is important. You're seeking $2 million to, allocate towards marketing, towards research, towards scaling, adding people. We want to see like maybe a pie graph on the use of funds. That's really easy for us to see. Understand, is it going to be more platform based? Is it going to be more software based? Do we need to bring people on board? That means a lot because when you're hiring people, that takes a little bit longer of a cycle. So we need to be aware of what's happening with the use of the funds. And then your exit strategy, what timing, strategic partners, acquisition partners, are you on the radar? Do you have strategic alliances or strategic connection to possible acquisition partners? Do you want to IPO? What is the thought there? So it's important to have just a little blush of what are similar exits? What do those look like in your space? Important, to understand, because sometimes we're familiar with your sector, sometimes we're not. So it's kind of nice to see what has exited in that sector and what is your plan to exit. That's it. So I just wanted to keep it very simple. What we like to see in a pitch deck, and I do have an example of a pitch deck, and I know JJ's familiar with this company. Get out of here.
So we have a question that's been posted if you want to answer.
Yes.
You can click on Q&A or I can read it for you.
Yeah, okay. Q&A, where's Q&A? There it is. Should one ask for seed money on the low side or high side? There are pros and cons for both. Well, when you're at the seed stage, it depends on if you have a product that's in revenue, or if you're pre-revenue, if it's just kind of like the ideation beta stage. So depending on the stage, we'll be thinking like there's companies where we're like, there was a company I just saw a few weeks ago and we didn't think they were asking for enough money. We thought, well, you're scaling, they're in the B2C sector, and they have a great product and they can scale pretty fast, but we thought this is not enough money. So it really depends on what stage you're in and what you're looking for and what sector you're in and what the use of funds are. Do you want me to type the answer to JJ?
No. It's
okay.
Fine. Yeah. Any other questions? Here we go. This is from Stacy.
Oh, hi, Stacy. I know Stacy's an OSEA member. I love you. Yeah, Stacy, there's lots of deal breakers. Number one, in your pitch deck, if it's like all the mistakes I just listed, that's like, no, we're not even going to engage in this. And then number two, we can tell when you haven't done your research. When you're in that pitch deck, it's we have a solution and this is what we're doing for the market, but you haven't really talked about the market. You haven't really talked about the research you've done to really garner if this is a problem for people and how much they're going to pay for it. The team, if it's a team that just really doesn't make any sense, like they come from maybe an industry that isn't applicable to what they're solving, and if they really haven't explained to us why they're the best team to solve this problem, that's a deal breaker as well. Not knowing your numbers, not really understanding the use of your financials and really being on top of that, that's another deal breaker. There's lots of deal breakers, but really the pitch deck again is your calling card. So if we're not liking it when we first see it, if it lands in my inbox, I'm probably just going to give you the canned response and move on.
All right, so we got Brian and Austin.
Okay, Brian's question is, this seems very geared toward B2C products, apps, etc. How does the pitch change, or does it, when you are developing a therapeutic? Much longer road to market and likely to exit. Can't demo, market often, yeah, right. Well-known, vast competition, many different types of risk. Well, you know, that you bring up a good point. We typically don't in OC look at therapeutics, but a TCA and CoFund and Titan, we do. So the messaging is still the same. We need to understand the problem that this therapeutic is solving. We understand that you're most likely not in revenue yet. You're definitely going through different FDA approvals and getting the IP in place or what have you. But the story has to remain the same. We have to understand, what is this therapeutic doing? What is the market size? So most of the elements that I talked about in the pitch deck still apply to a therapeutic or a pharma or a med tech device. We need to understand, you know, okay, maybe it's a catheter, but it's a unique catheter, and why, and we're working on the patent, and it's going to make the doctor's life easier, and it's going to be less painful for the patient. These things need to come across in your pitch deck. Austin has a question. I am pre-revenue with a demo prototype in the mobile app space and asking for capital to build my MVP product, as well as capital for a marketing campaign and launch. Do I need to split this up, or is it okay to ask for both? No, you should ask for both. You should definitely make us aware that you are revenue, you're in a beta stage. So you're looking and there are angels and VCs and groups that like to invest at that very early stage, but you have to also explain to us the use of the funding. I'm going to finalize my beta. I'm hopefully going to get the MVP ready to put in front of those first few clients. And then at the same time, I want the money for marketing. But I'm going to make this suggestion though. Maybe not explain that in the beginning, because you don't really know what your first low-hanging fruit client vertical is, because the MVP is so new. So marketing would probably come in marketing dollars. We really don't want you to be marketing this thing until you have a solid MVP with a solid roadmap. Maybe in the seed round, we'd like to see, okay, this is going to be used to funds. We have our MVP. Now we have the vertical that we're going after. We have the customer base that really it sings to. In our seed round, we're in early revenue now. That's when we're going to really be strategically marketing to this sector. So maybe not in the early stages, because you really don't have a product yet to market. And hopefully that makes sense. Sumita, building on Brian's question, how does one determine valuation for a life sciences company? Well, again, it goes back to your research. It's really tough at the early stages. You have to make sure that you have the right people that are doing the research for you to really drill down into that market size. Again, it's total addressable market, your segmented market, and then get a little bit more specific. Depends on your advisors and who you're working with to come up with that number. There's something you can come up with. We understand it's a moving target, but we have to understand, I'm going to take a catheter again. It's a catheter. We know that there's a catheter market, but it's a very specialized catheter. It's for this diagnostic or this thing. That's another size of the market. So we can drill down pretty quickly. You need to have those numbers, and that's the research you need to do.
It gets harder when it's life science, right? So
it does get hard. Because it's kind of like, okay, well, it will be approved. If it's not approved, we've lost all our money. So right. That's a different kind of investor that really understands that risk tolerance and the huge upside. And
the runway, the long runway that it takes. So yeah. But it's out there, but we understand it's a moving target based on milestones and metrics that the solution, they win and they go the roadmap. Yep. For a company, okay, so here's Amy Duncan. For a company involved in drug discovery, how much of a solution do you want to see? Scientists, founders typically want to dive into the data to show you how strong the science is. How much to show at this stage? Again, depending on the drug you're working with, and depending on the sector, because every drug is different, every solution is different, every sector is different. There's aspirin. There was a company I looked at early on, when I started angel investing, and it's called, I forget, but it was basically a nasal spray for concussion. And I believe they are in the market now. This was 2013. And so for us, we understood the problem for concussion, whether you're a professional athlete, whether you're a recreational athlete. But what this spray did is you would use it before the game. I was a football player. I'd spray it up my nose. So if I did have a concussion, I wouldn't get the swelling. Prevacus, I believe, is the name of the company. It was years ago. So there again, depending on the solution, depending on how you're using it,
it's a moving target. That's why get great advisors, really understand, working with a research university, they've got a handle on the type of discovery you're trying to bring to market. Hopefully they can give you that insight on, really how to show that. Let's see, Mohan. Is there a difference in the valuation between B2B and B2C companies? What do you look for that is different? Well, again, it comes back to the total addressable market and the segmented market that you are targeting. Those could be different. I'm selling shoes. Okay, that's great. That's a huge market. But what's so different about your shoe, like the segmented market? Or I'm offering this SaaS tool that's going to make your life easier. And when you're trying to, I'm just making this up. Aggregate all of your appliances and all of your things in your house. Okay, well, we know that that's a huge thing, and Amazon's trying to do that, and Walmart's trying to do that, everyone's trying to do that, but that's a huge market. But what is your solution? Where does that segmented market, where does it fit? So it depends on the market size that you are playing in, what that is. Then the valuation will come into place, because if you're going after $500 million, $1 billion segmented market in that B2B technology, and you're just trying to take out like 1% of it, though, that's one valuation, typical valuation at that stage. And if it's a B2C, like a shoe or bras or whatever, and we see a lot of the consumer and retail product, not that it can't be successful, you just have to really, really be specific on the segment that you're playing in. And we can do the numbers backwards too. We can do in our research, we can find out. So do your research and really understand the segmented market you're playing in. And JJ, definitely add to that.
No, I was just gonna say, in addition to everything you're saying is right. In addition to that, I always look for how are they gonna reach that B2B or that B2C, because if they have a real plan and they can reach, and their customer acquisition cost is low, it's gonna make a huge difference. So so it's also the go-to-market strategy is very important.
Right. Yeah, and it all backfills into evaluation. Evaluation can change on your journey. You may tap into something like COVID. I've had a few portfolio companies I've had to pivot, and they've pivoted well. And the market that they pivoted into is huge compared to the market that they were focused in pre-COVID. So it's always a moving target. But when you're trying to, at that seed stage, get in front of an investor, keep it tight, keep it simple, because those are numbers you can speak to with conviction.
So we have a question in the chat. I don't know if you see it. How does a pre-revenue company use licensing agreements and a launchable product in the valuation? Can we reach multi-million valuation without being live yet? Yeah, again, that depends on what it is. I've seen these types of companies before. They're very intriguing. We go back and we look at the team, at this point, because you're really, we understand the solution you're trying to bring to market. It's pre-revenue. It's not quite there. You're working on your getting the licensing together. We're going to be really, really looking hard at that team to make sure that they are the right people to bring it to market. They have industry knowledge. They're the industry experts. They know how to do this. So, it's just very, very subjective to that. All right. While you're pulling the, I guess the deck, we'll ask others to, if you want to ask more questions, please do so in the Q&A. If you'd like to ask your question via live audio, just raise your hand, and then we'll make it available so you can ask your question live. So it's up to you.
Let's see.
Is that the one? Is that the presentation?
Do you see it, Vertanza?
Yeah, I see it.
Okay.
Let me close this is as fresh as it could be, right? So
yeah, as fresh as it could be. We've just seen this. Can you see it?
Yeah, you can see it.
Okay. I don't know
so just to let everybody know that this company literally is pitching right now, and they're getting huge traction from many funds and many angel groups across Southern California. Just amazing.
Yes. So as you can see, and we are at OSEA's investing, TCA's investing. It's great. Titan invested, so it's wonderful. Universities are not preparing for learners. This is their opening statement. We get the solution. Vertanza provides the only scalable solution. And it's true. We know universities are not preparing learners for sales. This is a vertical. I came from sales, major account sales. So I'm like, yes, this is true. this would be, and a lot of the companies out there are looking for people, if they can hit the ground running, understanding those tools, understanding which sales vertical they want to go into, that's half the battle. They can easily, you know, bring on board those students that are coming out of college that have some knowledge, so their learning curve is a lot less. This is the solution they're bringing to market. And then here's their story. You know, sales talent has a shortage. They can't find enough people. They're constantly hiring, and they cannot find enough qualified people, and that's a problem. You can't scale your sales organization, which you need to scale your sales and to scale your company, unless you find qualified people. And if you can't find qualified people, that's okay, but it's going to take a long time to train them. A lot of dollars, a long time to train them, and hopefully they won't leave. So this is a big problem. The problem, no standard credential sales courses in universities. This is true. I can't believe this, by the way, JJ. I can't believe this, because I came from sales. That was almost 30 years ago. And still to this date, no universities are offering comprehensive classes for credit that really teach you the real world skills that you need.
Yep, that's very true.
Yep. And then here's their platform, Vertanza Sale Training Platform for Universities and Employers. Plugs into any learning management system. There you go. So they're showing the solution. Here's how we use it. It's very easy. We get an idea of what it looks like. Here's their traction. They're growing. They've got traction. At least these universities and virtual schools understand the need, and they're getting on top of it right now. It's so exciting. So this is a big problem. Here's their sales. They have two revenue models here. They have what the universities pay for the coursework, but the beautiful side of it is the recruiting side of it. So and you'll see their clients in the next couple pages of, you know, we need access to these skilled students that come out of these universities, that come out of these programs. We want to have first dibs at these students. And they're using a lot of the corporations, all of their clients, their corporate clients, solutions what do I say? What's the word I'm looking for? They're using their problems, and they're using there's a word I'm looking for, but anyway, they're using their issues like AWS or Salesforce. You know, we have a case study. They're using an AWS case study for a sales situation, or a Salesforce case study for a sales situation in the coursework. You're getting real world information. And then here are some of their employers that are like, yes, please, Quicken Loans. I mean, right now, oh my gosh, on LinkedIn, I'm getting so many hits up like, Xandra, we need to hire senior loan processors because the loan industry right now is off the hook. And we're paying them $25,000 up front, you know, just to get them in place, you know, because they're trying to poach from each other. We're paying them a one-time fee to just get them in here, a hiring fee, a hiring bonus, because we need these people to hit the ground running and process these loans, because it's going to be big dollars for us. So this is a problem. This is really, really good. And then here is their competition slides. You know, very simple. We get an idea. We can see the top. Okay, yeah, we've heard about some of these companies, and oh, they don't offer that, but look what Vertanza offers. Oh, they don't offer that. I thought for sure. I see Chegg all the time. Oh, that's interesting. Okay, this is great. This is really, really compelling. Here's their TAM. You know, so they put it like a little further back into their presentation, but it's a huge market. This is great. Here's their team, their rockstar team. It's wonderful, and their advisory team. Here are just forecasts. This is just a little glance of it. That's fine. We'll dig deeper when we go into due diligence. And then here's the use of funds, and here's what we're raising. Here's our use of funds. This is really great. Here's their exit strategy. Here's some competition in the market. We get an idea. You know, the numbers. This is great. And then, you know, here we go. Let's talk. So this was really simple, 14 slides. I mean, she did it pretty concisely, and to really get us on board, tell the story.
And we're going to share this with everyone, right? So that they can do that as well.
Yes.
Okay. Well, that's great. Thank you so much. Any questions to Xandra? Any questions live? If you want to ask your live question, please raise your hand, and then we'll make it available. If you have any question that you want to type, just type it in the Q&A, and then we'll take it from there. While we're waiting for that, you and I had a fireside chat not long ago, and I really enjoyed you talking about the communication part of what you like to see from portfolio companies. So maybe you can explain to the audience how important that is. I think it's a great point.
Yep. So one of my companies that had to pivot post-COVID, they were in the group SaaS travel state. That's the tool they had. But as we know it, group travel has gone away for a long time. So she realized we have to pivot, but we have this wonderful platform that has other opportunities. And a lot of her clients were saying, we need a Slack integration. She already had the Slack integration. So, but before that, she was always communicating with us monthly. And what I like to see, and it doesn't have to be monthly, but monthly would be nice. Quarterly is a must. I like to see a one-page email that shows the 3 things that you've done, the 3 successes, 3 metrics, whatever it is, the 3 things you're working on, and the 3 things you need help with or connection to. Keep it simple. She was always great doing that. So we always knew where she was, what was happening. Even when March hit, it's like, ooh, interesting times here. April, she was on it. She said, I need introduction. And luckily she had a year of runway in the bank. That's one of our other 7-point criteria at OSEA. She had a year of runway in the bank, so she had some breathing room. She already had the Slack integration in the platform, so she was thinking ahead. So she said, all I need is introduction to office managers for small to medium-sized to large-sized enterprise companies. I need introduction to these office managers. That was great. She got a lot of introductions, and she started beta testing the new iteration, the new company, the new tool. And she did that pretty much April, May, June. Really got the feedback, really formed the tool, really managed to pivot very well based on all that real consumer customer need. And then in August, she said, Xandra, we're launching this new company called Office Otter. I'm like, wow, what is that? And it's a great Slack integration and a few other team tools it can integrate very well. It's basically a task manager. And Slack doesn't have any task managers right now. But like the onesie twosie tasks that your teammate asks you via text or via email, or they just talk to you right now on a Zoom webinar. Oh, JJ, make sure you send me that pitch deck, okay? Well, you can add it to your Office Otter and say, I'm going to make sure I get that task done. And it's just a task thing. And you just wipe them off as you go. It gives you a gentle reminder every morning or every evening to look at your to-do list. And so she's slowly garnering traction, and she really made that pivot exciting. She's got paying customers now. And she is going to present to our group in October, but she's not fundraising right now. She's getting the momentum. She's making the metrics. This has been a great, great success pivot, but because she was communicating with us on a monthly basis, made it very simple. We knew exactly what was going on. We felt very comfortable with her ability to do this. We felt very comfortable. We wanted to see how she was doing it. We definitely wanted to help out. So communication is key. I can give you examples of companies that didn't communicate, and you fail well. I've had failures, a lot of failures, successes too, but the ones that failed, I have 3 that failed well and 3 that failed crappy. And that's another discussion for another day. Maybe we can do that in a talk. But the ones that failed well communicated. They communicated from day one, we're having some issues here. We need your help. Because, let us know. We need to understand what's going on, because it's in our vested interest that the company survives. But if we don't know what the issues are, or the things you need, or the connection you need from us, we're not going to be able to help you. So having that consistent communication, it doesn't have to be a 5-page dossier report. We don't want to see that. No one's going to read that. Just a 1-pager. 3 things that are going great, 3 things you're working on, 3 things you need help with.
That's, the lack of that is huge. Also, when companies are part of a portfolio of a, like TCA or a fund, we're always looking for maybe a little bit of a report, financial reporting and some other stuff. And that's really important as well, in addition to what you're saying, because
yes,
it gives us visibility
right.
to what
there's the difference. There's the monthly KPI, which I was talking about. Right. And then the quarterly, we need to see the reports. We need to see the financials. We need to see where you're going, what's in the pipeline. That's a more robust reporting. But on a monthly basis, if you can just keep us apprised of just that 1-pager with a few things, that's really great. Because it shows that you care about us. It shows that, we want to make sure that we're keeping you involved. You trusted in us. You invested in us. This is just, and it doesn't have to be like a lot of work. We want you to keep the eye on the ball. We want you to run the company, But it's nice to have a check-in once a month. That'd be great.
Yeah, and then the help that potentially the investors can offer could be really huge. The doors they can open. So
Yes.
there's another question in the chat from Dan.
Mm-hmm.
If you could see that.
Yeah, let's see, back to chat. In the Shark Tank, they keep saying they are different than VCs. Can you elaborate? Yes, they are different. They're not venture capital. Some of them have their own funds. I know that most of the sharks don't invest with their own money. I think Mark Cuban, a few of them do, but most of them have what are called like little small venture funds with limited partners, LPs in them. So they're investing not only their money, they're investing others' money. So, but they're angels. So it means that it's just them making me writing a check to that opportunity. I'm Barbara Cochran. I am writing a check to that opportunity. It might come from my SPV. I put here with some other like angel investors, but they trust me, but it's their money. So that's different than a venture capital group. A venture capital fund is typically run by a general partner, and they bring in what are called LPs, limited partners. And these are people in the industry. These are people that are looking to diversify, family offices, high net worth people, 250,000 and above checks to be in that fund. And they trust that fund manager. They understand the sector. They understand that the experience of that fund manager. Venture capital funds tend to write bigger checks because it's a $10 million, $20 million, $40 million fund. And they have a target of how many portfolio companies they want to have in the fund. If they're at the seed stage, seed level, it's going to be like a $250,000, $500,000 check sometimes. And then they're going to decide, well, how many do we want in the portfolio? 10, 20, how many? And then they're always going to keep money on the side, dry powder to reinvest, to help, to go into another round. So that's the difference between a venture capital fund versus an individual angel. Individual angels typically write smaller checks.
All right. How about now?
There's a couple more questions in the
see.
Q&A.
Okay. Okay, from Mohan. But they ask for more equity than VCs, saying that they are worth more. Does that make sense? It depends on the stage you're coming in. I mean, some of these VCs come in and recapitalize the cap table. And they're just like, we're just gonna take all these little angels out, but you're gonna value the company at this, we're gonna take them out. It just depends on the stage. And the angel and what they're going to ask for. And if you have a large dollar amount coming in, 250, 500,000, you're raising $1 million, 2 million, they're going to ask for some more things. They're going to ask for a lower valuation so they can have more of the cap table. They can have more of the company, but that is something you need to look really hard and deep into, because I am definitely not going to invest in a company where the founder has given away the company. Like they really didn't fundraise wisely, and they were giving away money just because they had to keep afloat. And now, they don't own the company anymore. They're not the majority shareholder. So that depends on the opportunity, it depends on the company, it depends on what you're raising. Not all VCs want to come in and take out the company. Not all angels want to come in and take out the company. Or the cap table.
All right, there's in the Q&A, the first one.
Do I need to make sure my investor is an industry expert, or do I need to be more worried about just getting capital? Well, you need to do your research on that angel and on that group as much as we do research on you. And there's really no right answer to this one. I mean, it'd be in a beautiful world, yeah, if they're an industry expert and they get what you're doing and they want to write a check, that's great. But there is also angel groups and angels out there that maybe not are experts in what you're doing, but they believe in the mission. One of my first companies I invested in, they're doing great, was in an algorithm in biotech. I'm not an expert in that, but boy, I believed in what they could do, and I believed in the team, and I invested early, and I invested in their Series A. So it just depends. It depends on the angel, and it depends, on how you're feeling about what they're asking for. Hopefully they're not beating you up on deal terms too much. We're going to ask for different things, but you have to have that good feeling with that investor.
And Austin also asked if he can pitch to you.
Oh, sure. Well, I need to see the pitch deck, and if you meet the 7-point criteria, we can talk. No, so we have the 7-point criteria that I look at. That's, like I said, I have a lot of companies coming to me, and I want to make sure that I'm not wasting their time, so I can easily tell if it's a fit for us. And if it isn't, I try to give them, some good advice. Go check out ACA, go talk to this group. They have the expertise. And so so if you've meet the 7-point criteria and it's in sector that our group would understand, I will take a deeper dive into and have a meeting with you, a Zoom call or what have you. But we also have a 5-minute pitch that we offer to early stage entrepreneurs that don't meet the 7-point criteria quite yet, but they're on their way. And in fact, one of the success stories was there was a company called Shunya. They pitched to us last June. They were early MVP. They weren't quite into revenue, but I said, please, Rashi, please stay in touch with me. I want to see how this is going, what's happening. One of my angels invested early. They came back and pitched to us last week. We're doing due diligence. She's got traction. So that's important too. I think it's important for our group to see these up and coming, early stage, early MVP companies, and have them learn how we work, and then we keep in touch on their journey. And when they hit the metrics, we bring them back, because we've seen, oh boy, we saw them a year ago, and look what they've done. They've hit those metrics. It builds trust with us.
Yeah, I just.
And do you only look at? Okay, yeah. Oh, go ahead, JJ.
There's a little bit of a background noise on your side. It sounds like.
Oh, am I? Oh, Joe. I'm sorry. My husband, unfortunately, I'm so sorry about that. My husband works for Broadcom, and we share an office, and he's on a call with his team. All right. So I'm going to try to speak over him, and hopefully you can understand.
No, we can hear you. It's just everybody was messaging us.
That's okay. I'm so sorry. Okay, so Mohan, do we only look at women-owned business? In a perfect world, we would, but we don't. We look at the opportunity. We look at the founder. We look at at what it is. Do we get excited behind it? I mean, we just funded Udify, which is Ravi Shamra, and he's amazing. So, we look at the opportunity and we look at the founder. So it's not always a woman-founded business.
There is in the chat, not in the Q&A. Dan has a question in the chat section.
Let's see the chat. Let's see, Dan. Can a licensing partner be on the advisory board, or is that a conflict of interest? I don't think so. I think a licensing partner would be okay. It's compelling only because they might want to look at you for acquisition, which is great. They want to make sure they're steering the ship, help you steer the ship, so they benefit. So possibly you're putting things in place, but you have to ask yourself that question: will they be doing that? Will we be biased to the needs of that one advisory board member from Salesforce or whatever it's going to be? It's a tough call. So that's something.
The advisory may be okay. Board member may be tough, right?
That would be tougher, yeah. So it just depends on you have to have your what are you going to do as an advisory board? Your scope of work with them. You should always put a scope of work together for every advisory person you have and board member you have. What is the scope of work? What are we expecting you to help us with, and vice versa? So that's important. And what is the board member advisor willing to do for you? Scope of work. So you can kind of flesh that out, in the scope of work. And Q&A. Anonymous attendee.
Yeah.
Will you leave contact information for early MVPs to connect you with their pitch decks? Yes, I mean, you can give that out, JJ.
Okay, yeah,
JJ.
We'll do that. Yeah. Maybe when I send everybody the pitch deck you have, we'll have your email address.
I'll add it on there. I'll add it on there.
That would be good. Okay. All right, we have a live question from Ong, so I'm going to bring him in.
Okay.
Go ahead, Ong.
Hi, Ong.
Unmute. Yeah.
Hi, Xandra. Can you hear me?
Yes, I can. Hi, Ong.
Hi. Just let you know, I also attended your previous live chat, fireside chat with JJ, and I thought it was very informative. So I just wanted to give you a quick kind of like a rundown. So what I'm trying to build is, just a platform. It's an entertainment space, and I'm trying to help the artists that needs access. So basically, the problem that I'm solving is access for film, music, and also performing arts. So basically, when I look at your like slides, what you're looking for from your perspective, I can answer all the questions. I can include that, except for the team, because my background is in sales, just like you mentioned earlier. Yeah, there's such a need for people to know about sales. I've done from cold calling, telemarketing, business B2B, and I'm in pharmaceuticals now. So yeah, I've got about 20 years under my belt. But the thing is, trying to build a team since it's a very niche market as an entertainment, a lot of people, they don't want to come on a team with just for sweat equity. So my question to you is, how much of the if everything else is equal, as in all the other areas that you're looking for, that I have a strategy and also plan in place, how much of the leniency or weight that you're willing to help to build the team, like if that makes sense, like, hey, you know what, I've got someone that invests in entertainment industry that you might want to bring him on as a maybe a board member or maybe a CTO, someone that can help you, give you advisory, so that we can help you build this team, and while we watch you grow as a seed fund for the baddest for the early stage and the MVP stage. Does that make sense?
It does. It depends on the angel group and the VC. In fact, there's a group out of the Bay Area called the Hustle Fund, and they like to invest pre MVP or right when you've got your idea, and they help put that team together for you. So you just need to do your research on what angel groups or VCs like to go at that early stage, and they come from the industry expertise. There's a lot of venture arms in the entertainment industry. I'm not connected with them. I don't invest. I don't know about that industry, so I don't invest in that industry. I don't invest in what I know. But I would do more research to see, does Netflix have a venture arm? Does Endeavor have a venture arm? Like, does Disney have a venture arm? I'm sure they all do. And to try to find out, who's affiliated with those venture arms. What do they look for in these early stage companies? How do I get into their accelerators? So look at venture groups and venture arms of companies that are in your industry. That's a good place to start. Another place would be like the ACA, Angel Capital Association. Kind of drill down. They have a list of all their members by state angel groups, and kind of see who are the entertainment investors here. That's where you're going to have your best bet in finding people that are in your ecosystem that could possibly, number one, like what you're trying to build here, but you are going to need that strong team for them to take a different, a deeper dive and a deeper look into your solution. So that's some of my recommendation there.
All right, thank you.
Yeah, I mean, the other thing, there are, like you said, Xandra, there are some specific investors that also inject the human capital, but they're taking a huge chunk of the company because there is no team. So that's also potentially another solution, but it could be, for some, could be the only solution because they don't have the team. Thanks, Ang. We will, any other questions from anyone? All right, so if there, oh no, we do have two Q&A questions, it looks like. Oh yeah, we do. Stephen and Austin. You're on mute, you're on mute.
Yeah, my husband's, yeah, okay. So understanding that valuation is a negotiation, is there a minimum percentage of the company that a VC will take? Again, it depends on the VC. I know VCs that say, we don't want to come in, we just want to take a little bite and see how you're performing. Others, like, we want to help you scale this thing, but for us to have skin in the game, we're going to definitely want to take out a little bit more of the cap table. It just depends on who you're talking to. And then Austin, I am an early stage pre-revenue company that will be a great candidate for your 5-minute pitch. However, instead of building a specific team to build my MVP and marketing launch, I have proposals from Google, Premier, Level Dev Shop, and marketing agency that I've worked with in the past. Would you rather see a team that does this, or does it scare off investors? No, if you have strategic alliances at the MVP stage and they want to kind of help you and mentor you and watch what you're trying to make, that's a good thing. That's part of, we're building our MVP. We know you're early stage. You're looking for those advisors and those early team members, perhaps, that'll help you get to the next level. They come from industry expertise. That's not a bad thing. It just, we'll need to understand as you scale, as you bring the MVP to market, how they are going to interact moving forward and how they're going to support you. Maybe they'll support you making recommendations on someone to put on your advisory. Maybe they'll want to join your advisory. Maybe there's an accelerator within these organizations that they want to bring you in and help and mentor.
All right, thanks, Xandra. Just to remind everybody, at the top of the chat, there is the networking virtual lounge link and the password. So make sure you copy it now, because we're going to jump over to the virtual lounge in a couple of minutes, and that may be okay. So yeah, Stephen just posted it again, or at the bottom of the chat. So please grab the HIO link, and then grab the password, which is OC-2020-VIP. Xandra, thank you so much. This was amazing. It turned out to be a great Q&A here. So then answering a lot of questions. So are you going to jump over a little bit to the lounge?
I am. I'll jump over to the lounge. I'll spend some time over there. I'll see everyone there.
Let's try it out. Yeah. Thank you so much, everyone. All right. Bye-bye.
Yes. Bye.